Hey, what's up guys, welcome back to the channel. In today's video we're going to talk about one of the most underrated growth stocks in the market that I think can easily double from its current price for long-term investors. I'm of course talking about Corsair Gaming, trading under the ticker symbol CRSR, which is a company leading the gaming hardware and software space in many aspects, but whose stock price has done nothing but go down over the past 7 months. I'm going to talk about two big reasons for why this stock is down so much this year, do a quick summary of their Q2 earnings report, and at the end I'll do an analysis of the stock chart to get an idea for when this stock can really start moving to the upside again. But before we get into it guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. For those who might be hearing about this company for the first time, Corsair Gaming is essentially one of the world's biggest suppliers of computer hardware and gaming peripherals like keyboards, mouses, and headsets. And just recently, these guys have also entered into the streaming and software space through their acquisition of the Elgato brand, which is literally one of the most popular tools used by content creators globally. YouTube and Twitch streaming alongside the huge opportunity in esports has significantly expanded Corsair's revenue streams with that buyout of Elgato while keeping their profit margins relatively high. And this is one of the big reasons for why Corsair stock could be one of the easiest money investments for the next couple of years, given just how strongly dedicated and niche their market is right now. And as we all know, content creating is becoming the dream job for so many people out there, and the computer hardware industry isn't going to slow down anytime soon, even if last year kind of blew demand for stay-at-home equipment out of proportion. As you can see, Corsair did over $1.7 billion in sales last year, with roughly $200 million worth of that going to the bottom line of their income statement, yet the stock is only trading at a market cap of around $2.5 billion. I mean, for a company that is growing gaming peripheral revenues at 40% year over year while continuously introducing new products onto the market, a price to sales ratio of only $1.3 is really dirt cheap. And this paired to the fact that these guys have recently secured a very low interest rate credit facility for $350 million means that a lot of the debt on Corsair's balance sheet should be paid off more aggressively over the next 5 years, while their cash interest expenses every month actually come down. This will definitely help with profitability and obviously lessen the uncertainty that I think a lot of Wall Street had priced into this stock because of the relatively low cash position that Corsair initially had. So now that we have an idea of the growth trajectory of this company and the extremely undervalued nature of the market capitalization, let's understand the real reasons for why this stock hasn't really moved all year. One of the two big reasons is the fact that in Q2, these guys' adjusted EPS actually came in lower than the year before at 36 cents instead of 37 cents. In my opinion, this higher loss is most likely because of the higher cost of materials the entire world had to endure over the past 6 months, and the fact that Corsair is investing really heavily right now into their products this year. I mean, these guys averaged 3 new launches every week for the past quarter, which will obviously eat into their bottom line earnings. And to be completely honest, this fast growth into new product lines right now is going to pay big dividends in the future because of the super sticky nature of the whole gaming industry. And as we've seen through their gross margins, the company's gaming peripheral segment is becoming a bigger portion of the net income, so I'm extremely confident that their recent launches of things like the Elgato webcams will hold up profitability for Corsair really well. The second reason for why this stock has not moved much this year is likely because of the fact that historically IPOs generally underperform in their first couple of years. As you guys might know, Corsair went IPO just about a year ago in September 2020 and rocketed higher in the first couple months of trading from around $15 to well over $50, and as a result, it's really easy to see why there would be so much selling pressure on a stock like this. Insiders and even the private investors of the company will obviously want to cash out some of their funds, since IPOs rarely 3x from the offering price in such a short amount of time. But as we've seen, unfortunately for newer investors, this has created an overhead ceiling for the stock price for many months now. But as you might be able to tell, all these reasons I just went over are very short-term headwinds for this company right now, and the long-term growth outlook for this business is still incredibly strong. And that is exactly why I continue to be a buyer of CRSR, even if the stock continues to go down for the next couple of quarters. Because at the end of the day, if the stock is going down and the business is actually improving and growing, that is when you get the best buying opportunities in the world of growth stocks. To get a better idea of when this stock can really start moving and what are good entry prices for this specific business for long-term investors, let's have a closer look at the stock chart. As you can see clearly after the IPO in September, the stock had a lot of buying pressure from both retail and institutional investors that sent the stock up from $15 to $50. But since then until February is when we really found this kind of top right here and got rejected from this resistance level at around $50. And since then, as we all know, there's been a huge growth stock rotation dislocation that has basically plummeted every single SPAC, EV, and high growth company in the market. Unfortunately, ever since February of this year, investors have been really scared of inflation and obviously that stay-at-home orders being lifted, which is why so many growth stocks have struggled and investors have rushed to pile their money into Apple, Facebook, and Microsoft, which are these bigger, larger cap and potentially safer names. But to be completely honest, this has created a really good buying opportunity for long-term investors who are able to handpick business models that are high quality and growing at double-digit rates every year. And that is exactly what we're seeing here with Corsair stock. As you can see, after that Wall Street bets pop back in June, we've sold off really aggressively and we've actually gained a very significant amount of short interest, which is sitting at around 31% right now. 31% is actually really high for a company that's trading at such a small market cap at under $5 billion. But that, in my opinion, adds an extra spice to a potential big move coming on the stock once Wall Street and the hedge funds really let this thing go. As you can see today, we had a pretty big red day on this company, closing right below this support level, which means that I think we can test this $25 level very, very soon, which is why personally I'm looking for good buying opportunities around this $24 to $25 region for the next few weeks. Personally, I think anything under $30 on this company is a really good deal because you'd be getting in at under a $3 billion market cap, which is still relatively cheap. But if you can find entries around 25 bucks, you're getting an even better risk to reward on your investment. As you can see right now, we're underneath both the 200-day and the 50-day moving averages. As a result, for me, an uptrend on the stock would really begin once we get above this $33 level. And as you can see in the past, the $33 level has acted as really strong resistance, which is why if we break above that for a day, we could see a very big short squeeze to at least this $40 level. And as you can see from back in November of last year, we have a lot of support that's sitting around this $25 to $26 region, which is why I would personally look for buying opportunities right now and not wait too much for the stock to move to the upside. As you can see, we're starting to see a lot of strength on the RSI, and even though we're underneath that $40 level, we're seeing a lot of bullish momentum because we're kind of making higher highs even though the stock is making lower highs. And that is one of the most bullish divergence indicators you can get on any daily chart. And on top of that, if we have a look at the MACD, you can see we're still underneath that zero line and we're potentially heading into a crossover, which obviously could signal a very big reversal coming in the very short term. If you're looking to swing trade this stock or are interested in getting some short-term price targets, my targets would be at around $33 followed by $40 and around 47 bucks in the short term. But obviously as a long-term investor, the technicals don't really matter to me, which is why personally I'm looking for any day buying opportunities on the specific company, and I don't really plan on selling for at least the next 3 years. But anyways guys, make sure to drop me a thumbs up if you found some value from this video. Let me know how many shares of Corsair stock do you own, or whether or not you're interested in buying this company down at these levels. I'd be really interested in hearing you guys' opinions. But anyways guys, I hope you enjoyed this video and I'll catch you guys in the next one. Take care.